20 trades, no hesitation, no emotion. There's a difference between having an edge in the market and being able to execute this edge successfully. These two things are like parallel lines that doesn't meet sometimes for us as traders. As traders, we've spent a lot of time, we've spent countless of hours trying to curate a strategy, trying to create an edge that actually works. After spending all this time creating this edge and the parameters of this edge, we even go as far as backtesting this edge to ensure that the edge has actually worked in the past. And in some cases, we even live test the edge in order to build confidence in that edge, only for us to then mess it up, probably after a losing streak or having an urge to jump on the next new strategy, or our sheer inability to obey and follow the parameters that defines this edge. The legendary Mark Douglas, who authored the famous trading book called Trading in the Zone, gives us one of the most powerful mindset exercise towards the end of the book. This simple challenge is an attempt by the author to try to flip our thinking and also force us to think and trade like a pro. And I call this exercise the Trading in the Zone challenge. Now, there are 7 steps you need to follow if you want to do this Trading in the Zone challenge. My name is Easy, and the purpose of this channel is to share my trading journey and also to curate educational content that might also help you in your trading journey. Please subscribe to this channel if you are yet to. Like this video, drop your comments, and also share this video with your friends. Step 1 is to pick a pair. Pick a pair of your choice. Make sure that it's a pair that you are comfortable with, a pair that you have traded over time, a pair that you have an understanding about how it works and how it moves. The second step is to pick an edge. I know a lot of us have different strategies that we've probably backtested and we feel like we are confident in. But for the purpose of this challenge, all you need is just one edge, just one technical strategy to execute this challenge. Choose an edge that is objective, an edge that will eliminate every form of discretion or gut feeling. The third step is to define your entry and your exit. You have to choose parameters that are defined in order to eliminate discretion. If your strategy, for example, says that you must take profits at 5R, then you must take profit at 5R. No room for discretion. And also on the other hand, if your exit strategy says that you must take partials at a certain point and hold the remaining position till take profit, that also works. But the point is that it must be defined and it must leave no room for discretion. Step 4 is to decide on a time frame or time frames to use for this challenge. For example, if your strategy says that you use the 1 hour time frame for direction and the 5 minutes time frame for entry, then so be it. And also, if you are the type that uses just one time frame for both your direction and your entry, that also works as well. The point is, if you are using the 1 hour and the 5 minutes time frame, then you must use the 1 hour and the 5 minutes time frame to execute this challenge. There is nothing like going down to the 3 minutes time frame to refine or the 1 hour time frame to refine if that was not defined earlier. Step 5 is to commit to a sample size. And in this example, we are using a 20 trade sample size as recommended by Mark Douglas. But if you are a scalper, I would recommend using a higher sample size, because as a scalper, there is a possibility that you might execute about 5 trades in a day depending on your strategy. So having 5 trades in a day on the average and having a sample size of 20 doesn't really correlate, in my opinion. So if you are a scalper, you might think of having a larger sample size, maybe 30, 50, as you wish. But for someone like me who is just a day trader, I will just keep it at a 20 trade sample size as recommended by Mark Douglas. Step 6 is to accept the risk. And I know this sounds cliche because you probably heard this over and over again, but you must accept the risk. So that is why I would recommend that you do this challenge with an amount that you are comfortable losing, with an amount that will not impact you too much. Step 7 is to focus more on tracking the execution of this challenge rather than the outcome of the challenge. Now, this is very important because the primary goal of this challenge is not to make money. Remember, the primary goal of this challenge is to recalibrate your thinking, is to help you to think as a trader with lesser emotion, to help you execute your edge with lesser emotion, not primarily to make money. You can track this by documenting the process and also by keeping a trading journal. Remember, we are tracking discipline and not profits for this challenge. And finally, when you get to the 20th trade, which happens to be the last trade in this challenge, it doesn't stop there. You have to repeat the challenge again till your brain gets it. That is what the author Mark Douglas recommended in the book. Remember that in the book, Mark Douglas also pointed out that success doesn't come from predicting the market. Rather, it comes from executing your edge with absolute consistency over a period of time. This exercise is designed to rewire your beliefs, and also it's an attempt to break your addiction of wanting to be right all the time in the market. If you are serious about mastering the powerful mindset that is needed for success as a trader, I would recommend that you start here by doing this challenge. 20 trades, no hesitation, no emotion, just you, your plan, the market, and the discipline to follow through with your plan. And I believe that you can do it if you truly put your mind to it. Personally, I'll be doing this challenge and I'll be documenting the entire process on this YouTube channel. Kindly subscribe to this YouTube channel if you are yet to, and also join my Telegram channel to get real-time updates on this challenge. The link will be in the description of this video below. See you in the next video. Bye for now.